Let's get to oil. Oil has been jumping today. You have Russia, you have Saudi Arabia agreeing to extend production cuts. 52.49 is where we are for a barrel of crude oil. So that's a 3% gain, up along with stocks. And Fairlead Strategies founder Katie Stockton is our guest now. I know you look at these things from a technical perspective. So what do we make of the gain today, Katie?
Well, it's nice to see it finally gap up after really what has been just a prolonged and persistent corrective phase. We do have a short-term momentum buy signal on today's move in crude oil, and that would suggest that it does continue over the near term. However, it's within the framework of a long-term momentum sell signal. So there's sort of conflicting readings depending on what time frame you're looking at. So looking for a short-term up move, but something that might fail in the high $50 per barrel range.
All right, at 53 or just below it right now, explain kind of a little bit of what you mean by that, because the downtrend that we've been seeing has been in place for multiple months, right?
Right, and that's the loss of long-term momentum that we've seen. So it's really only improvement over the very short term in our measures. Resistance on the chart of crude oil is right around $57.50 per barrel. So I do indeed think that we've seen a bearish reversal over the last couple of months in crude oil. So now we have to look at these up moves as counter-trend in nature. And counter-trend moves, as you can imagine, are more often short-term in nature. They don't tend to be lasting. And, of course, there is resistance in the wake of that corrective phase.
And if we get from where we are now, 52.50, up to where that so-called resistance lies, somewhere, as you say, around 57.50 or something like that, what's the key to look for? Is it usually some sort of a fundamental change, news flow change or something like that, that decides whether or not we can break through that or come crashing back down?
Well, really, I'm looking at supply and demand for WTI in and of itself, irrespective of the fundamentals in the macro picture. So what we would expect in that range, in that $57, $58 per barrel range, would be a short-term overbought condition that would then impact short-term momentum, which, as you can see today, has certainly improved.
Yeah, speaking of that would be an overbought condition. Everybody was saying it seemed like for weeks that we would get down to below 60, then 55, and then once we got around 50, and when we broke through 50, people were saying it over and over, this thing is oversold. It was oversold at, a few bucks higher than where it was. How were you looking at it on the way down? Were you surprised it went down as far as it did, or did that whole thing make sense?
I think I was surprised at how persistent the decline was. We barely got even a relief rally over the course of a couple of months, and that part of it was very surprising. It's when you don't see that reaction to an oversold condition is when you tend to see these bearish reversals occur. So the oversold conditions were persistent and didn't generate an oversold bounce, and that was a message from WTI crude oil. On the downside, there were support levels probably about every $5 to $7 per barrel. The most recent one, of course, is right around $50 per barrel, and that, in part, is due to its psychological significance as a round number.
As a round number. Sometimes we hear people tell us all the time round numbers don't matter, like when we're Dow, whatever it is, 25,000, but sometimes I guess they do.
I think with the Dow, as just one example of a major index for equities, I just don't think as many people watch it anymore. So the levels are really more important for the S&P 500.
Right. But the round number in crude oil, my point is, like at 50, that actually does matter to people. It's not always some, esoteric figures. And people say, wow, $50. So, all right, Katie, it's always good to see you. Thank you for coming on. We appreciate it.
You as well.